Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. It's been a forgettable week. That's the best way to describe this week. We've seen a lot of pain. In fact, the August series ended, with a thud. In fact, the Nifty lost 500 points for the August series, and the September series also hasn't really started on a great note, given the fact that we came very close to breaking below that 24,400 mark as well. Mind you, the early August low is 24,337. We haven't really broken below that level, but yes, 24,400, that was going to be tested today, but thankfully that didn't happen. We ended above that level, but still, it's been a forgettable week. For the week, we have shed somewhere around 2% on the Nifty, and it's been the worst week for the market, so to say, in the last 5 months or so. So yes, not very good, the setup. But next week we have the crucial GST Council meet on the 2nd and the 3rd and the 4th of September. That's when we get to know the changes to the rate structure for some of the products, and that's how of course, there could be some sentiment booster as well for the market. But today, largely all the sectors ended in the red, but FMCG pack was among the few sectors that managed to hold its ground. A lot of these FMCG names saw buying interest. We saw the index per se ending higher by about 1% amid all the gloom. Media and consumer durables, these are some of the pockets that did okay in today's session. But the texture was clearly towards the downside. We did start the day on a good note, on a positive note, so to say, but kind of fizzled out. In fact, the Reliance Industries, that stock is in focus. There was the 48th annual general meeting, a lot of announcements. We'll talk about that in just a bit. But the stock did see a sudden pop. It was doing well throughout the session. It saw a pop when the Jio IPO roadmap was announced, but then it fizzled out and ended the day in the red. The market per se, of course, the broader end of the market also in the red. We saw the Nifty mid and small cap indices ending deep in the red. The mid cap index was down somewhere around 0.6%. The small cap index was down somewhere around 0.4%. Even the Nifty Bank index, of course, underperformance continues there as well, firmly below that 54,000 mark on the Nifty Bank as well. So all in all, not a great session, not a great week. In terms of laggards, you have M&M. That stock has come under pressure lately. We'll talk to our technical expert about that stock. Reliance Industries, that was a close second, stock down 2%. Infosys, Apollo Hospitals, Adani Enterprises, NTPC, and the list is long. But we did have gainers in the form of ITC. Some of the other consumption names like Trent did well, Asian Paints did well. But you also had the likes of Bharat Electronics, Shriram Finance snapped out of a losing streak. Yesterday, that stock was the top Nifty laggard. Today, among the gainers, Ultratech Cement, Kotak Mahindra Bank saw an upgrade. On the back of that, the stock was doing well. Cipla, Sun Pharma, Tata Steel were some of the other gainers. But the big story then, let's first talk about the key takeaways from Reliance Industries 48th AGM. Now, at the AGM, Reliance Industries Chairman Mukesh Ambani shared the next steps in the vision for the conglomerate. Jio IPO is expected by the first half of 2026 in its landmark IPO, unlocking value in India's digital crown jewel. Of course, investors were watching out for the timeline of Jio IPO, and that's come about. Since its commercial debut in 2016, Jio has amassed more than 500 million customers. Jio has also built the world's largest 5G rollout with ambitions to expand into smart homes, enterprise digitization, and consumer AI services. Akash Ambani also introduced GeoPC, a cloud-powered virtual computer that transforms
and
any screen
empowering
into an
super
AI-ready
talented
PC.
young
The AGM also highlighted Reliance's broader push into AI, clean energy, and digital services as it charts the next phase of growth. Now, Reliance Industries has also unveiled Reliance Intelligence, a new wholly owned unit to drive artificial intelligence in India with Google and Meta as their partners, India partners, strategic partners, so to say. Now, Reliance Industries has also said it will reorganize its consumer products business into a direct subsidiary, giving sharper focus to the conglomerate's youngest growth engines as it seeks to challenge multinational rivals in India's fast moving consumer goods market. So, yes, lots of takeaways from the Reliance AGM. The stock did cheer the Geo IPO news, but ended the day in the red. Although throughout the session the stock was holding its ground. But before we come to our guest, let me tell our viewers that if financial freedom is your goal, Super Pro is your superpower. Get live trading and investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts on WhatsApp all in one. And right now, with our special financial freedom offer, get the annual plan for just 2,499 rupees, down from 7,499 rupees. Download the Money Control app and subscribe today. You can't miss this opportunity. All right, then let me bring on board our guest for today. Joining me is Jay Thakkar, Head Derivatives and Quant Research at ICICI Securities. Jay, great to have you. Just entering the weekend, but the mood is really somber, right? 24,400. You're just standing at that threshold. 24,404. That was the intraday low. Thankfully, didn't go below that 24,400 mark as well. But we've broken below crude support levels. Below the 20 DMA, 100 DMA. So, what is it that you're envisaging? Do you think there is more weakness? Are we looking to find a floor? Is it close by? Is it far? What is your view?
Hi, good afternoon to you, Nandita, and thanks for having me on your show. Well, as far as this week was concerned, definitely quite weak it was. I would say, I would put it that way. And apart from Nifty FMCG, I believe rest of the indices were in red. So there was across the board selling. I mean, whichever sector you see. I mean, Nifty FMCG somehow managed Nandita to close in the green, more than 0.5% or two-third of a percent, I would say. The rest of the indices were negative. But then, yesterday we had this monthly rollover for August, and looking at the monthly rollover series, what I believe is that, what we have rather. We the key takeaways from that is that we have seen more of short rollovers, maybe index heavy short rollover in Nifty and Bank Nifty. In fact, we have seen more than 6 months average rollover. The data is, I mean, rollover is more than 6 months average. On both of the indices, Nifty and Bank Nifty, more than 80% respectively. I mean, 83 and 81% respectively. Apart from auto, healthcare, FMCG, or pharma, I mean, these are the few sectors. Apart from this, all the other sectors, Nandita, have seen good amount of short rollover. So when you have this kind of data, definitely talking, or it becomes difficult to say that markets have bottomed out unless you see some reversal or short covering. So the data
Hmm.
is negative. In fact, the net short on the index of FIs is still at around, say, I mean, gross is at around 1,85,000 contracts. The net must be 1,70,000 contracts. Gross had gone to 2.10 approximately, and historically we have seen 2.4 also to be oversold. So percentage wise, we have FI net index long at 8.59%, which is again at the lowest level. It had bounced back to 14 base, now back to 8.5. But contract wise, it's still not oversold. Percentage wise, it is.
Hmm.
So, and the Nifty PCR has fallen up to 0.56. And we have a Tuesday weekly expiry now from next week onwards. And subsequently, we'll be having monthly expiry also on Monday or Tuesday for Nifty. So, I think that for the next weekly expiry, that is on Tuesday, the upside is capped to 24,600, whereas
Hmm.
the floor could be 24,000. So at least for next 2 days, Monday and Tuesday, we see this 600 points range on Nifty. The trend is sideways to negative unless we see a reversal.
Hmm. Trend is negative unless we see a reversal. Of course, rollover data is also throwing up negative texture. Since you mentioned FMCG, of course, that was among the few sectors that managed to do well today. But any stocks that you would be looking at ahead, especially ahead of the GST Council meeting? Would you look at staples more, or would you look at some of the consumer durable names, or in fact even some of these names like Trend for that matter?
Yeah, I mean, among the consumer durables too, Nandita, you're right. We had seen some good high interest in today's session for yesterday as well. When you look at Voltas, has been trading positive since past couple of days. But then see, the major beneficiaries, according to me, could be for sure, auto. And that is why we have seen this run up. I mean, from, coming down from 28% to 18% is given now. in almost all the auto names. So I think it's going to help them, apart from luxury cars. So, I mean, we are going to talk more than 25, 20 lakhs, 30 lakhs, something like that. But anything below that would be straight away coming to 18% is what I believe. And that's very certain. In
Hmm.
the FMCG and consumer durable, you don't know which of them will be placed from 18 to 5% and which will be kept at 18%. So there is a confusion there. What's very clear is that these are the names in auto which are going to come at 18%. So certainty is out there more. So I would be more focusing on auto rather than any other stocks out there. I mean, we have a more clarity out there. There is a lot of probability here. There is certainty.
Hmm. What about M&M? This stock has been under pressure of late. The stock actually has done quite well. If you look at the 1 year chart, 6 months as well, it has done fairly well. But off late, it has come under some sort of pressure. You know, and any trend that you are spotting, any decisive trend, or is it just profit booking?
Yeah. No, I think it's profit booking. See, Nandita, unless it comes or falls significantly below 3,000 levels or closes below 3,000 levels, I am considering M&M's correction as a profit booking as per the derivatives data as well. I mean, what has happened? See, M&M has been an outperformer, Nandita, and Maruti has been a laggard. Tata Motors is not performing, we all know that. And Ashok Leyland has been doing
Hmm.
good. So if you look at the CVs or, PVs for that matter, the stocks which were doing really good were all of these apart from Tata Motors. And within that, M&M was the topmost performer. Now, with this kind of
Hmm.
GST reform and definitely with the kind of launch of EVs which Maruti did and our Honorable PM inaugurated that as well, definitely you would see some shift in the portfolio probably is what I can reckon, from M&M to Maruti, probably, that could be one of the reason which I can infer. Otherwise, I don't see any other reason for profit booking. Otherwise, I mean, the
Hmm.
stock is good from a medium to long term perspective. There could be some shift in the weightage based on this fundamental change, is what I believe.
Got it. Profit booking, that's the thing that's keeping the stock under pressure. But cement is another pocket that's been focused, right, in the wake of GST rate
Yeah,
rejig. Of course,
yeah,
reports
yeah.
are suggesting that the rates would come down to 18% from 28%. We've seen Ultratech Cement do well today, but Orient Cement is one stock that has declined for a fifth straight day, and the stock is down 36% so far in 2025. So it has, seen quite a bit of a pain. The stock, in fact, did hit a 52-week low as well. Within the cement names, leaders looking much better in comparison to names like Orient.
You're right, Nandita. I mean, thanks to you that you reminded me about cement as well. I mean, this is one sector wherein I'm bullish as well. And there too, there is almost a certainty that you want to see this rate cut from 28% to 18% as far as GST is concerned, for sure. And I mean, that's very much likely. And hence, cement as a overall pack is also doing good. In fact, despite this kind of a monsoon which we had, early monsoon and continuous monsoon as well as it may stretch up to September here as well. You never know. I mean, September end the way is going. I mean, it's raining right now also. So still they have been managing to hold on to their prices. If you look at the derivatives data, I mean, clearly there have been a long build-up cycle for last 3 to 4 months. So you'll be seeing these prices going up, the open interest going up for these 1 quarter or more than that, and they have been managed to hold on to their prices as well, which clearly indicates that a lot of consolidation seems to have over and stocks have given a breakout. Maybe Ultratech, maybe Ramco Cement, which is now not in FNO, not on stock, but Ultratech and Dalmia Bharat for that matter, has given a good breakout today. Pamuja so far has done okay, but apart from that, I think auto and cement, these are the two spaces wherein you have seen a good rollover, right? Orient Cement, I think, now I think Nani acquires that. The company is now getting taken over. So I think now that's out of the radar. I mean, until unless you don't have a new management completely into it and doing some um, changes, I believe, till then the stock may be under pressure, may not perform or underperform the overall sectoral rally. Hence, one can avoid Orient, and I don't think one should be buying on dips right now because there's not much of clarity out there. But yes, Ultratech, Dalmia Bharat, among the two FNO names, and from the non-FNO names, it could be Ramco Cement. I mean, these are the three stocks which clearly indicates a good long-term consolidation breakout. From year two, I mean, you can see
Mm.
20-30% rise at least in a year or so, which is a good return.
Got it. That's about cement, but we can't not talk about the bank index, right? The Nifty bank's underperformance has stretched for quite a few sessions now, below that 54,000 mark as well, firmly so. Uh, how are you looking at banks? Of course, we will be talking about large cap banks, etc. But what about Yes Bank? That stock was up 4% after reports say that SMBC is set to infuse somewhere around 16,000 crore rupees. So Yes Bank, of course, bucking the trend, so to say, news based. But how would you look at the overall banking index now?
In bank has been one of the sector which is weighing hard on Nifty, and I mean when they are still on an overall basis, I would say it's outperforming the Nifty. I mean, if you see the both of these indices topped in September 24, right? Nifty and Bank Nifty. So we had seen that 26,300 plus kind of levels on Nifty in September 24, and now we're almost about to complete a year of our all-time highs on Nifty. I mean, this particular month, maybe in the last week, 22 or 23. So since then, Nifty from 26,000 still at say 24,300, right? So 2,000 points down, roughly around say 8% or so. Bank Nifty then was 54 and now is 54. So it's like flat
Hmm.
from the peak of 1 year. So likewise, if you see, there has been an outperformance vis-a-vis Nifty. In this particular fall, there has been an underperformance, and of course, for the reasons like the repo rate cut and aggressive repo rate cuts, and CRR cut, and all of which would definitely affect the bottom line of the bank for the short term as far as the NIMs are concerned, and that is what is the adjustment going on right now, I believe. And once this festive season starts, and once this GST reforms happen, I think there is going to be a good domestic demand pickup, which will definitely offset or to an extent offset the export hit, because of which I think bank is also considering to factor in that. I mean, because they've been lending to these all of these industries, right? I mean, there now lending is going to stop. If there are job losses, then definitely housing demand is likely to slow down a bit. I don't know to what extent. I am not the correct person to talk fundamentally there, but this is a logical thing which I'm talking. And so what depends, what remains is your personal loans or probably your spends. That is on consumption, right? Not high ticket, but low ticket consumption, maybe in a car or whatever, those kind of finance. And that is all likely to pick up from the festive season. And now government, because of this GST reform, things are like 1 or 2 months now postponed, right? And so the impact instead of 3 months might be 6 months, and that is what bank is factoring in extra. And once that is over, I think the consolidation will be over, or correction will be over, and again you will see that uptrend. Because if you see private sector bank, Kotak Bank or HDFC Bank, they've come out of long consolidation. So, is there the retest of the same happening is what I believe. Once that is over, we should be looking out for a good uptrend. As far as Yes Bank is concerned, as you asked me, obviously, a 20% stake sell or buy from Sumi, banking or something like that. I'm sorry, I don't know the exact, I forgot the exact name, but I think that is positive. Yes, as per the news, that is positive for the bank, and that can have the stock to move up. But apart from that, I don't see any other reason on Yes Bank to be bullish. I think
Hmm.
Bank Nifty might hit 53,000, and 53,000 remains a very, very strong support in the near term, Nandita. At least for this series, September series, 53 is important. I mean, if 53 breaks, it might head towards 51 as well. So overall, there
Hmm.
has been a short rollover and a short build-up in the banking names, maybe PSU or maybe private sector banks. But then outlook there is negative for sure, and that's the weakest sector as of now, apart from IT. So the weakest sector would be banking and financials only, and there are a lot of shorts
Hmm.
there. So that would require a very good positive for the trend to reverse. Otherwise, there can
Hmm.
be some short-term bounces, but then those bounces, I reckon, are likely to get sold into.
Sure. I was just taking your point on IT. We did see the IT index starting the week on a very strong note. But since then, it kind of fizzled out. And of course, banks we just spoke about. IT and banks both are not taking the leadership. In fact, none of the sectors, FMCG maybe a couple of days now, but the leadership is missing. So here onwards, would you expect FMCG to continue taking the lead?
See, Nandita, I mean, out of the 15 sectors which are there in Nifty, which comprises total 100%, of which banking financial is approximately 40 and Nifty IT is approximately 9 to 10%. So 50% are these two indices which are not performing, although Nifty IT might have outperformed Nifty Bank in the recent past. I mean, its particular fall, if you see, then Nifty IT managed to bounce back since 8th of August. Okay, and 8th of August, Bank Nifty has been falling. So in that sense, in last series, August series, IT outperformed the Bank Nifty. Generally, they've always been most of the time trading in the opposite direction. But then that doesn't mean that IT don't have shorts. IT do have shorts, and 50% of the market are these two. You have got oil and
Yes.
gas mainly because of Reliance around 9 to 10%. That's not doing good. That's now negative as well. I mean, today we have Reliance AGM and the stock is down again today as well, and that's in
Hmm.
fact come down below 200 demand as well, right? So that 10%, 9 to 9, 10% gone. So what's left? I mean, cement has 2.5%. I mean, construction material has 2.5% weightage. Auto is around 7-8% weightage. Two sectors which are looking positive very clearly on derivatives data and as well as rollout data just comprise approximately 10 to 11% of Nifty, right? And probably FMCG say 9 to 10%. So you can say 20% of the index is looking positive, 80% is looking negative. Hence, I'm not talking about a larger trend reversal in market, Nandita.
You know,
As you rightly
you
said, you
know,
really require that leadership.
Hmm. We need that leadership. But I want to just touch upon the GDP data that has just come out. The expectations were ranging anywhere between 6.6 to 6.8. But the first quarter GDP has come in at 7.8%. That's way above expectations. Of course, you're not an economist, but that also provides a positive, sentiment booster kind of a thing, right? In terms of data, because expectations are far muted. 6.8. That was the poll that we were working with. 7.8%. I mean, do you think there could be some bit of positive impact on a Monday at least? Because today, of course, for the
There
major
should
part of
be.
the session, we were holding on to that positive zone. So could this provide that positivity that the street really needs?
Definitely, I mean, Nandita, it should be a good positive sentiment on Monday. Why? Because we already have shorts in system, right? And
Hmm.
instead of 6.8, I'm coming in 7.8. So definitely, that clearly indicates that domestic demand might have held up. And the additional tariff of 25% got levied from 27 August. So that impact we are going to
Hmm.
see in the next quarter, not this quarter. Maybe, for next month or maybe subsequent months, following months, not now. So this is something which has happened in past before the recent additional 25% tariff happened. And but that clearly indicates, I'm sure that there is going to be good rise in the domestic demand. Then that is a positive thing that will help Nifty or the indices at least to bounce back. And there could be some short covering, but I don't think that this short covering could lead to a bottom or short term bottom. I mean, it's too early to say that. I
Hmm.
mean, for me to understand that Nifty has to close about 25,000.
Okay. Close above 25,000, you said, right? I mean, for now, that kind of looks like it needs a very strong Q for that. But just want to read out some of the numbers for the benefit of our viewers. The GDP growth, of course, for the first quarter is 7.8% vis-a-vis 6.5% on a year-on-year basis and 7.4% on a quarter-on-quarter basis. We were actually going to lag on a quarter-on-quarter basis, but we managed to beat expectations on both the fronts. Gross value added is at 7.6% vis-a-vis 6.5% year-on-year and 6.8% on a quarter-on-quarter basis. Agri growth has been fairly strong at 3.7% vis-a-vis 1.5% on a year-on-year basis. But mining sector growth has declined vis-a-vis a growth of 6.5%. We've seen a decline of 3%. So mining, I think it was anyway expected to be a little subdued. So that is a little weak. And if you look at some of the other internals very quickly, Jay, apologies for holding you on, but manufacturing growth marginally higher at 7.7% vis-a-vis 7.6%. And electricity growth is also quite meager, 0.5% vis-a-vis 10.2% on a year-on-year basis. So yes, agri growth has been fairly strong, but overall numbers have really managed to beat expectations. Positive surprise, so to say, 7.8% vis-a-vis a poll of 6.8%. So yes, some good news to end the week and to enter into the weekend. But Jay, couple of other counters that I want to getting your thoughts on is the entire capital goods space. Anything that's catching your fancy there? Capital goods, defense also for that matter, because smaller defense names like Apollo Micro, they have done fairly
Yeah, I mean, L&T has been doing good. You see, L&T has been good, and that's been holding quite well. I mean, entire range of say 3,400 to 3,700. I mean, this is one stock which is outperforming the Nifty big time. I mean, it did fall along with Nifty until Feb of this calendar year, but then somehow it managed to bounce back quite sharply and has been holding its 200 demo as well. I think till L&T is holding out 3,500. The probability of inching towards 3,700 or maybe beyond to 39, 4,000 levels, 3,900 to 4,000 levels is quite high. So L&T is one stock which one can keep an eye out. There, the risk reward is favorable. The trend looks positive. And there's a lot of resilience out there as well, I mean, compared to Nifty. So this is one stock I think one can look into, or watch at least in the short term.
well. Got your point. Any thoughts on Ola Electric before I come to your recommendations? Ola Electric, of course, I think best month since listing. The stock has been on fire. Uh, would you be a buyer?
uh, I would say, see, technically, stock has just formed high tops, high bottom. Although the volumes are saying quite a lot. I mean, there has been super increase in its volume. And with this kind of, rounding bottom kind of a formation, a very early sign with a very good increase in volumes, I think the one who wants to basically take the advantage of rise in sales, expected sales of the auto stocks because of the GST reforms going forward, and if the subsidy continues in the EVs, then probably with the stop loss of 47, one can consider to include this in the auto portfolio or the overall portfolio, having some weightage of to it in the overall portfolio. I mean, which if you are assigning say 10% to auto, of that 10%, 2%, or sorry, of that 10, 15% could be of Ola. Like with that, with the stop loss of 46, one can include, or maybe with the stop loss of 40, the recent lows, one can include this. It's too early to say for a long term reversal, but short to medium term reversal seems to have happened.
Okay, short to medium term reversal for an Ola Electric. But before I let you go, Jay, anything that's on your radar for the coming week? And one more thing, how are you really positioned? In terms of an F&O strategy on the Nifty.
Well, see, as far as Nifty strategy is concerned, as I said, Nandita, that 24,600 to 24,000 the range on a closing basis is what I'm expecting. I mean, or maybe not 24,700 if you have to stretch on the higher side. So this 700 points range is what I'm going to see for the next week. Um, as far as derivatives data is concerned, since we have seen a lot of short rolls and a lot of shorts in the system, there is always a chance of short covering in the market backed on any positive data, but there has to be a really good sustainable data for the Nifty to bottom out and continuous rally upwards. I mean, GDP data is a good data for a short covering. Now, can it lead to a bottom? Too early to say that, and hence I've kept my reversal at 25,000 levels on the upside because we have seen a directional fall in Nifty since it broke 25,300 levels, and since then the resistance has been coming down, and now it's in the range of 24,800 to 25. On the safer side, I said 25,000. So the strategy on Nifty could be that if at all it bounces near say 24,700 to 800 levels, if you see a bounce of 400 points or 300 points from the current price, and it could be a good opportunity to sell on rise with a stop loss of 25,000 on a closing basis, or maybe beyond that. Or if anytime it falls to say 24,200, near to say it's 200 demo, you can go long around 24,200 to 100. There's stop loss below 24,000 because this is the range I'm seeing at least for a week or so. As far
Hmm.
as stock ideas are concerned, as we were discussing the sectoral outlook, Nandita, and definitely the Almia Bharat is looking positive to me as a the Almia Bharat is trading around the levels of say 2395, 2400. I think it's likely to use towards 2600 to 2800 in the short to medium term. And on the downside, I believe that 20 to 50 will act as a very crucial support. From the power space, CG power looks absolutely positive. I mean, we have seen long build up out here with a very good sideways consolidation breakout. So from both technicals and derivative perspective at 694, it looks that it might inch towards 720 to 735 levels. One can take the stop loss below 680. And as a disclaimer, I would say that CG Power is a stock which we have recommended already to our clients. On a bounce, Nandita, REC and PFC, these are the two stocks. They're quite oversold right now and they're fallen quite a lot. But if at all there is a bounce of say 5 to 6% on REC and PFC both, and generally both trade in the same direction, that bounce should be utilized as a selling opportunity on both of these stocks. Any bounce in metal names, maybe Jindal Steel, JSW Steel, should be utilized as a selling opportunity because they're quite oversold in the short term, but the trend has reversed. So metals and REC and PFC, these are the names wherein I would recommend shorts or sell on rise. Maybe 4-5% rise and you can sell it out. And on the long side, apart from CG Power, Dalmia Bharat, Nandita, I think that Bajaj Auto from the auto pack also looks positive. I think it can reach towards 90 to 100. One can buy that as well. I mean, as a disclaimer, we have a blue pulse price recommended to our clients as well. So these are the few long and short ideas from my side.
All right, those are long and short ideas from Jay's side. With that, Jay, would like to thank you for taking out time and joining in as usual. Always a pleasure, and more chats in the coming weeks, and hopefully the setup will be much better
Thank
than
you.
today, of course. Sure,
For sure. Thank you so much for inviting Nandita. Pleasure. Thank you.
thank you. Well, with that, of course, we've come to the end of closing bell, but just a few lines on, how the market is expected to open on Monday. As Jay was pointing out, there could be some bit of short covering up move, given the fact that we've got very positive GDP data for the first quarter, 7.8% vis-a-vis expectations of 6.8%, beat expectations higher both on a quarter-on-quarter and a year-on-year basis. Agri, segment has done extremely well. And of course, we also have that crucial GST Council meeting coming up next week, where we will get some clarity on, which products fall under which category. The two-rate structure that we are, looking at when it comes to GST reform. So that will be very crucial for the market as well. Because remember, because of that, we saw the FMCG index, managing to provide some support to the Nifty, so to say. That was the only index that gained somewhere around 1% or thereabouts in today's trading session. Globally as well, there is the PCE data that is awaited in the US, the personal consumption expenditure. That's a key gauge that Fed uses to determine really its inflation projections and the rate trajectory as well. So yes, that will also provide some clarity, although the Fed chairman has also already hinted at a rate cut in the month of September. But yes, not looking great. If you look at the screens today, it's red, and of course the index is around the 24,400 mark. We've broken below the 24,500 mark, and weekly losses as well, 2% loss on the index for the week. So not looking very great, but hopefully it's going to be a better week next week. Of course, we'll watch out for that, and of course we'll be back with the market on Monday morning. But before I go, something for our viewers really. If financial freedom is your goal, Super Pro is your superpower. Get live trading and investment ideas from SEBI registered experts, pre-identified chart patterns, and AI powered stock alerts on WhatsApp. All in one. And right now, of course, with our special financial freedom offer, get the annual plan for just 2,499 rupees, down from 7,499 rupees. So yes, it's a great opportunity. Download the Money Control app and subscribe today. You can't really, miss this opportunity. But with that, timed out. Have a great weekend. Well, of course, with that, it's the end of closing bell. Have a great weekend, and of course, we'll see you with the markets on Monday morning. Rest well, and come back and join us for all the market action on Monday. Thank you for watching.